Hi, this is Samir Halal, your trusted investment advisor from Cleveland, Ohio. Today we're going to be talking about Roth conversions. And it's important for you to review the video we made last time that talks about Roth IRAs and how they differ from traditional IRAs and what their advantages are, because it would make this video a lot more understandable and a lot more powerful. A Roth conversion effectively is when you move cash or investments from a traditional IRA or a SEP IRA into a Roth IRA. It's also considered a conversion when you move money from a pre-tax 401k into a Roth 401k. Now, why would you want to do that? Well, there are a lot of advantages to considering a conversion, but as far as I'm concerned, the top ones, there's 4 very important advantages. The first advantage is that all future compounding that happens in the account from the point of conversion happens on tax-deferred basis, and then in retirement, that money comes out tax-free. The longer this period of time is, so if you're doing this 10 years before you need to take money out or 20 years before you need to take money out, the more profound the benefit is. So it is a very substantial benefit. The second advantage of a Roth conversion is that it provides better control in retirement. So Roth IRAs are not subject to required minimum distributions in retirement. What that means is if you have money in traditional IRAs as well as money in Roth IRAs, having the ability to control your taxable income and where you're taking the money from allows you to control your taxable income, which in return allows you to have some control over your Social Security benefits and how much of it is being taxed, as well as what those Medicare premiums are. The third major advantage for conversions is that you don't have to take money in retirement. Going back, that Roth IRAs are not subject to required minimum distributions. What that means, if you're one of the lucky ones who does not need to have any additional income in retirement, you can allow this money to continue to compound inside the Roth and not take any of it out, and effectively continue to build that nest egg for your beneficiaries. And then the fourth advantage, because of the first 3 advantages that I mentioned, the fourth advantage is that Roth conversions are becoming more of a staple when it comes to estate planning because of those 3 advantages. Obviously, there are some disadvantages. I think the most important disadvantage with a Roth conversion is the tax effect of the conversion. So what that means is that if you are converting, let's say 20 grand from a traditional IRA into a Roth IRA, you want to make sure that you have enough liquidity to pay the added income tax on that money, as that 20 grand will be added to your taxable income. When the federal government established the Roth IRA, they established it with certain qualification limits. So effectively, to be able to make contributions into a Roth IRA, your income needed to fall below certain limits that the federal government established. On the other hand, when they also implemented the Roth conversion, Roth conversions do not have income qualifications. What that means is that just about anybody can convert money from traditional IRAs to Roth IRAs. So that effectively created a loophole, which later was dubbed the backdoor conversion. The way it works is that if you're not able to make direct contributions into a Roth IRA because your income falls above those qualifying limits, then you can deposit money into a traditional IRA on non-deductible basis, and then immediately turn around and convert that money into a Roth IRA, creating a 2-step process where the money ultimately ends up in the Roth IRA, and you get all the benefits that we discussed prior in the Roth IRA. Effectively, this Roth backdoor conversion, if you will, opens up the door to higher earners who normally would not qualify to make direct contributions into a Roth, and gives them the ability to have money be deposited into Roth accounts. the bottom line of the conversion is that it is something that has been discounted and ignored by many investors, and I think it is too important to be forgotten. So it is definitely worth for everyone to look at and see if this makes sense for them. Obviously, this is something we can help you with. Give us a call and we'll talk.